Yo guys, what's going on? It's Lewis here with Crypto Elite, and it's time for another big market update. We definitely need one after the absolute carnage and bloodbath that we saw this weekend. Hopefully you guys didn't lose too much money. I definitely lost a ton, which really sucks, but this is part of crypto. If you can't handle the downs for the 20%, 30%, 40% downs, you can't handle the 500 or 1,000% moves up. That's what the deal is. So we got to really be cautious. We got to probably just wait until the next bull market to really go in super heavy. This definitely was a kick in the ass. So from now on, I'm really not going to be going in too heavy unless we get some major thing that happens, or one of these indicators or a couple of these indicators that I go over in these big market update videos actually show that we're potentially at a bottom. So with saying all of that, let's jump right into them. We're going to start off with the Bitcoin Bull Run Index. I like starting off with this one because it has all of these different indicators: the Pi Cycle Top, the Rupal, the R Hodl, the Puel multiple, the 2-year moving average, Bitcoin, Trolololo, trend line, MVRVZ score, reverse risk, and the Wubble top cap versus CVDD score. So there's a whole lot of things that go into this Bitcoin Bull Run Index. Right now it's at 25. What I say is that if it hits a 3, I go in with about 40% of my portfolio, with 30% of my portfolio. If it hits a 2, I go into it with more than 30%, probably 40%. And then if it hits a 1, then all in, right? So if it hits underneath a 5, which it did back here, and then it pops back up, now my criteria is that it has to come back down and hit a 5, and that's when I will go all in again. So right now it's at a 26 or 25. If this comes down and hits a 5, then I'll go back in. Right now it's not even close, so nothing else to really say about this. I'm going to continue to wait. Then that is the CBBI. Next up, we have the Pi Cycle Top indicator. This obviously is not relevant right now because the Pi Cycle Top indicator, but I want to I always look at it. This is part of the system. I probably don't need to, but yeah, it does call tops fairly well. So I'm just going to skip right over this one. Actually, I'm going to go straight into the MVRVZ score. So we're going to just go into the MVRVZ score. And this one, if it comes back down into the green, then I will consider buying. I would like to have at least one other indicator with this. Obviously, green is buy zone, pink and red are sell zones. And so it came into the green, popped back up. If it comes back into the green, then that's going to be a buy for me. So very similar to like what happened back here, where it came to the green, popped up, came back down to the green. Okay, same thing back here. Came to the green, popped up, came back down to the green. And even somewhat up here, like I guess, yeah, it came to the green, it popped up out of the green and for a very, very short period of time, and then it went back down to the green. So if it does come back to the green, I will want to be buying. And that's the MVRVZ score. And then we have the R Hodl ratio, which is a little bit more accurate, actually. It seems to be a little bit of a better indicator. And the same exact thing, if it comes back down into the green, then that's going to be a buy for me. So, and all of this is for Bitcoin, by the way, because I'm not waiting on regulatory certainty or anything like that, but I'm waiting on some type of regulation, hammer fist thing to come down to get into alts, because I do believe that altcoins will probably continue to get beat down for quite a substantial amount of time, and until there's regulatory certainty, we're not going to have another bull market, and because of how slowly the government works, it's probably not going to happen for a few years, unfortunately. But for Bitcoin, who knows? Honestly, we're probably not even going to have another bull market until regulatory certainty happens for altcoins, even for Bitcoin itself. So it's going to be I think it's going to be a few years. Not very excited about that, but who knows? You never know. Maybe they'll come out with it next year in 2024. But either way, these are still good indicators to look at, and you can still make money by trading. So I'm going to simply be like scalping and doing short trades, which I'll talk about in my other video, checking the charts video. But right now, this is for my bigger picture type stuff. This is for my like bigger account and all this type of stuff. So I'm looking at our hold ratio. If it comes down back into the green, I'll be a buyer, but right now I'm not. So then we have the Bitcoin rainbow chart. It's in the buy zone right now. If it comes down to the basically fire sale zone, then I'll look for other indicators. And if they all line up, then it would be good for me. Finally, we have the fear and greed index, which is at 47. I need this to be under 15 in order for me to be a buy regarding this indicator. So it's no good, or it's not no good. It just doesn't tell me anything. Next up, we have the crypto total market cap. Crypto total market cap. Well, what happened? We hit the top at just about at $3 trillion. That was the top, 3 trillion, right? Then we dropped all the way back down to underneath $1 trillion. And that was the previous all-time high. You can't see it on this chart, but it was the previous all-time high. And then we popped back up and, hit the 6123.6 fib retracement from the top to the bottom, 23.6. Really nice. Okay, that's great. I would have loved to see the 38.2, but apparently we're not even there yet. We're not close to getting there yet. And now we're on our way back down. This right here was extremely bearish. Should have probably realized. Well, I mean, I did call it out back then. I was like, okay, these candles really suck. And now we're on our way back down. And I'm not optimistic. I'll say that much. I want to be, but I'm just not. Maybe, and obviously this current crash did have something to do with it, but also I bought a lot during this current crash, and I realized that there's no liquidity. There's really no liquidity, because when I could move a top 40 coin on the top exchange in America with my by market buying it or market selling it, and I can move that, then that goes to show like that's not a lot of money, relatively speaking, what I put in. And whale and market makers and exchanges and people with actual money who just want to mess around, they could do whatever they want. They could completely manipulate this market up, down, left, right. It doesn't matter. So they're gonna really try to screw people out of their positions, and they'll push the price down further than you can imagine, just to buy more and throw the price up just to get people to FOMO buy in, and they'll do anything. So I'm not really trying to trade too much anymore in this market, because this might be the top. And I want to share something with you right now, which is really telling. There's a crypto total market cap, right? Look at this. Okay, it comes down, has a complacency bounce, comes all the way down, has the second complacency bounce, comes all the way down again, has the third complacency bounce. Now, look at this. It hits the top. It comes down, it has the complacency bounce. It comes down, it has the second complacency bounce. It comes down, it has the third complacency bounce. This looks like where we are. This really does look like where we are. And considering that we have a lot of time left before regulations and things actually, come into place, I do think that this is where we are. I do not think that we're going to go higher than 30,000 anymore. Who knows? I don't know. Everything's up in the air. This is crypto after all, but this looks an awful lot. This does look an awful lot like this chart, where price comes down, comes up, price comes down, comes up, and then tanks super far down. Price comes down, goes down, comes up, tanks super far down, makes a bounce, falls even further down, makes a bounce all the way back up, makes a bounce. This one doesn't come all the way back up, but this one did. This one actually came a little bit higher, unless you count it here, but it came a little bit higher than here. Okay, it's off by just slightly. And then what happened after that? All the way back down, targeting 15,000, 14,000, 13,000. Which, let's look at Bitcoin. Look at the Bitcoin chart. Basically the same thing, except this one did come up a little bit higher, or a lot higher than this one. If this chart was exactly like the psychology of money chart, then this would have been the top right here, but this ended up being the top. So, you don't know, but if we do get the low, then that would be around 80% down from the highs, which is confluent with the previous, previous cycles where Bitcoin would fall down 80% down from the highs and close. And also that would be close to the 88% Fibonacci, which is the institutional buy zone typically. And also it's the 2017/2018 yearly close /open. And also it's the area where miners become unprofitable. So there's a lot of confluence right here. But there are a few things that I'm thinking maybe this was the bottom. And the biggest thing for me is really this chart right here. I talked about this last time. I basically talk about this every single time I make these videos because I got to keep reminding myself of this. And the price bottoms and the price tops, they fluctuate around the halving date. So pretty much from the low to the halving is equal from the halving to the peak. And, let's say that this was not the low. Let's say that the price comes back down and it makes a low somewhere around here. Well, that means that if the low ends up, coming down, it makes a low right here. And if, let's say, I don't know if this is a few months or not because I can't see the chart. But let's say it does that. Okay, that means that there's only going to be 34 bars, so 34 weeks from the low to the halving. And if that's the case, that means there's only going to be 34 weeks, maybe up to 40 weeks between the halving and the peak. While if this was the low, it makes a lot more sense because if this was the low, then the halving is here, and that's 71 bars, and then so then the peak would be from the halving to the peak, which would be 72 bars. And the last one from the halving to the peak, or from the top to the bottom, was 364 days. And this was 378 days. So very, very close, from the top to this bottom. And so looking at the actual chart, it'll make it easier to understand. Yeah, so, from the low to the halving is a certain amount of days. And that's typically the same amount of days from the halving to the peak, plus or minus 2%. This has happened plenty of times before. And it's just like, if this isn't the bottom, then what are we going to do? We're going to have pretty much let's say 140 days. And then it'll last 140 days when all of these other cycles lasted, 500 days or whatever. Like from the low to the top of this last one was 1,000 days. It took 1,000 days to go from the low to the top. And it took 1,000 days last cycle to go from low to top. It took from the low to the top of 2007. It took 847 days. So you're saying that it's going to take 1,000. Wait a minute. Whoa. Hold up. If this is the bottom, yeah. This is what I'm saying. If this is the bottom, then it'll take 1,000 days. Relatively similar from the low to the peak. 850 to the first one, 1,000 for the real one. Actually, now that I'm looking, I don't know. This is fucking confusing. This is honestly confusing me now. Hold on a second. I need to look at this. Okay, so I just spent a long freaking time making this chart, making sure everything is accurate and figuring this out. I'm going to have to use the big screen for this. So we have the first cycle low to the first Bitcoin halving. That was 379 days. And from the first Bitcoin halving to the first Bitcoin cycle high, that was 366 days, which was 3.43% less than the low to the halving. The second cycle low to the second Bitcoin halving was 542 days. The second Bitcoin halving to the second cycle high was 529 days. So approximately 2.4% less to go from the halving to the high compared to the low to the halving. Then the third cycle low to the third Bitcoin halving was 513 days. And the third Bitcoin halving to the third cycle high was 548 days, approximately 6.82% more from the halving to the high. Note, if the first high was taken right here, then this would be a 33.91% less time compared to from the low to the halving. So I don't think that this is the high. I think this is, this is the high. This is when the high is supposed to happen if you take all of these previous, cycle lows and halving cycles to cycle highs, right? So let's say that this was the high, right? Now we have this low. If this is the low And this is the halving. Let's say the halving is in April of 2024. We don't know exactly when, but it's going to be April 2024. So let's just say it's the first. Okay, that's 479 days. Excuse me, 497 days. Well, if we, let's say, expand that and add 5% more, then that would put it right here. And if that's the case, then this would be the fourth cycle high somewhere over here. Then, if you take the first cycle low to the first cycle high, that was 747 days. The second cycle low to the second cycle high was 1,068 days. The third cycle low to the third cycle high was 1,061 days. So 747, 1,068, 1,061. So it seems like it's around 1,000 days. And this one, if you take this low to the approximate high, well, that would be around 1,020 days if this was the low. Okay, so I'm looking at this. This seems like reasonable. This seems like it could be a reasonable chart where this makes a higher low. So the low's in and it makes a higher low. And then, we end up shooting up and this happens, right? This seems pretty reasonable to me. Now let's add in if this actually is a lower low and this ends up being the low, right? If this ends up being the low, well, the halving date stays the same. So the low, if this is the new low, if the low's not in and it creates a new low, let's say around here, then the low to the halving, let's call it 196 days. Then let's say the halving to the peak is the same amount as this plus, 5-10%, something like that, right? So we extended it a little bit. Well, even if we extend it, that's only 221 days, as opposed to, let's see, the low to the halving and then the halving to the peak. So the halving to the peak, 548 days. The halving to the peak, 529 days. The halving to the peak, 366 days. So if the low's not in, then, and it's something like this happens, then that means we're only going to have a 220 day, approximately 221 day time span from the halving to the peak. And also that would mean that from the low, if this is the new low, that would mean that from the low to the new peak would be 421 days. Yeah, the low to the peak, 1,000 days. Low to the peak, 1,000 days. Low to the peak, 747 days. So this would be really short. This would be such a short cycle. Like, this yellow line makes sense, right? But if we get rid of that and we draw this hypothetical cycle, that would mean that it would be something like this. Come all the way down here, make a low somewhere over there. It's, a little bit early, but whatever. Come up, do this, and then make a high here, and then start, going lower. Does that make sense? This just seems so jammed together. Like, very, very quick, very, very quick. That means that the peak is going to be May, June, July, August, September, October, November, December 2024. I think we're just going to start, like, the bull run's only just going to start. I mean, the bull run started in September of 2020 and it went all the way. Well, actually it started really let's say September 2020, and it went to April 2021. And actually the bull, it went to November 2021. So it was over a year for this bull market for Bitcoin and Ethereum and some of the bigger coins. For alts, they ended right here. But this doesn't make as much sense to me. So now it's like, I'm not 100%, I'm not totally certain. I mean, I'm never totally certain, right? But this seems right here, this seems a lot more likely. So in this scenario, the bottom is in. And I realize that me saying that but it contradicts what I was talking about earlier, where I said I think there's going to be a new bottom because we're going to get 88% from the highs, right? But I'm not one. I don't know. I don't really think so anymore after doing this now. It's obviously, you could tell it's going back and forth. So I think honestly, I think just playing it level to level is the way to go. And so I'm going to take a look at this. I'm going to take a look at some of these charts, and we're going to go into Bitcoin and, just take a look at these levels, these higher time frame levels. Okay, so pretty much my conclusion is that we have to play level by level, but ultimately right now, thanks to the Bitcoin, the market psychology chart, the precarious nature of the environment right now, the fact that crypto has been eating shit while equities have been raging, and so much more uncertainty, that Bitcoin will continue to go down. Not to mention, Bitcoin's in a downtrend, like crypto's in a downtrend, right? Also, incredibly good AAA trades that normally have insane hit rates have been failing. I think that we're going to go down and we're going to continue going lower. If there's a new low, if there's going to be a new low, obviously there's going to be a new low. But there's definitely going to be places where I want to be longing before then. This right here at 22,000 is one of those places, because that's the 61.8 from this bottom to this top. Additionally, if you take this bottom to this top, here's the 61.8 right here. This lines up pretty darn well with the 50% right here and this potential order block. So let's look at the weekly. Okay, right here, we have this down move before the up move that broke this market structure. So that is this weekly bullish order block. So let's, write that down. Let's say weekly bullish order block. Then looking at the weekly time frame, what do we see? Well, we see obviously we had this big range from here to here, okay? And I guess I used it on the daily chart. So something like this. This was the original range from here to here. I feel like we deviated below it, and then we never even got to the major support plus yearly open / close, plus the 78.6% of the recent high, plus the 38.2 of the major expansion, like 32,500. This was the level to get out. There's liquidity up here as well because of it's right above these highs. So there's going to be a lot of people who shorted over here, and this was the place to get out. So this was really it. But after this move happened and we fell back down below this major line right here, that was this support, right? So let me do this. We had this major support right here. We fell below it. We came back up, we tagged it, and now we're falling down. And now we're in a bearish market. Why? Because we made the high, we made the low, we made the lower high, tagged it again, came back down, made a lower low. Bearish market structure break right there. Okay? Made a even lower low. Well, I guess you can't really call this a lower low, but pretty much came up, made a higher high. That's good. Bullish market structure break. So what do? We label it as, we label the down move before the up move that broke the market structure as a bullish order block. But what happens? Let's go down to 12-hour. What happens when instead of bouncing off of the bullish order block, it ended up actually dropping down and closing below it? Well, now it becomes a bearish breaker. And what happened? The price raged all the way back up to the very top of the bearish breaker, fell back down, and now it fell back down to the lows. So this is a bearish breaker, and this is still in play because this is a bearish breaker and it never closed above the bearish breaker. So it's in a downtrend. Things are looking like shit. Maybe it'll come back up to here. Why? Because, well, within this big bearish breaker, we have this move up that happened before the move down that broke this market structure. This isn't 100%, but this is a bearish order block within the bearish breaker. So I think that most likely scenario is that on the lower time frames we do this and we end up coming down actually to the 61.8 right here at 24,000. Then I think that we're going to have a bounce. Now, where will we have the bounce to? Here, up here, maybe the lower side of, this whole move. That's a terrible drawing, but this whole move, right? That's even worse. What am I doing? And then fall all the way back down and hit this, which is the 61.8 of the entire move up and the 78.6 of this move down, plus the bullish order block right there. I think that that's the most likely scenario. So this is what I think is going to happen. I think it's going to be a little move up, followed by another breakdown, followed by move up, followed by another move down. And then after this happens, I don't know. Maybe we'll bounce back up to the top of this range again and then fall back down and actually break this. Or maybe, that'll be it, and that'll be the higher low that we're looking for, because it would be a higher low continuation on the higher time frames. If we go to the weekly, the weekly time frame, if we just, this would be a higher low. It would be within the weekly bullish order block. It would be at this key level, and then we'll move up. So I don't know, but this is what I'm thinking is going to happen. So this is what I think is the play, unless we just roll over from here. So yeah, that's what I'm going to do. Okay, so also I want to go over the dominance levels. So let me just click this. This is the dominance for altcoins, and you can see they actually fell below a major support level. And for Bitcoin dominance actually, I need to keep on pressing play. This is from a long time ago. Bitcoin dominance is freaking absolutely surging. It's an absolute powerhouse. So I don't really even feel comfortable going back into alts until maybe Bitcoin dominance is up here, because that's gonna be, what is this even a key freaking level? Like, I have my alt dominance chart measured up, but yeah, that'll be like down here for the alts. So this would be a decent level to start long alts, but honestly, I don't know. I think alts this cycle are gonna get freaking crushed and probably come all the way down here. I think this is gonna be the actual breakdown of alts, and alts are going to just get absolutely demolished, and we're not going to see alts stay up here. All of this was memes, all of this was crap, all of this, even though altcoin dominance was really good for the past year or two, the meme coins, the bullshit, all the crap, all the stupid stuff is what kept us alive. All the scams, and they all everything that's actually good underperformed Bitcoin. So yeah, I think that alts are going to continue getting crushed, and I want to get out of all of my alts, to be honest. So I'm trying to sell a lot of my alts on any moves up. I think we might have one big spike up, not a big spike. Think we might have a spike up, but then I'm trying to get out of them, just personally speaking. Maybe you want to keep on dollar cost averaging in, maybe you want to do whatever you want to do, but I don't want to take any more risks with alts after this hit that I just took. I can't risk anymore. I've been risking it, a few times, and then this last time I risked it when alts were down here, when alt dominance was right here, and that did not work out well at all. I risked it again when alt dominance came down again. That did not work out. So it's really not, alts are just getting hammered, and until we get the clearance from the SEC and some clarification, there's no money that's going to be flowing into alts. It's all going to be manipulation. It's all going to be people who have hundreds of millions of dollars just taking the market and being market makers and doing whatever the hell they want. So I am trying to get out of alts for the most part right now. Okay, and with altcoins looking like absolute shit, the altcoin dominance looking shit, I would think that Ethereum would also look really bad too. And if we take a look at Ethereum, it does look really bad. Ethereum is actually the one that I called the top right here when we had this 2-week candle looking like this and this huge wick up. I literally said in every single stream or in every single video, this looks really bad. This shooting star type candle at a resistance with an SFP on the 2-week chart, it's terrible. So yeah, that happened. And then when we got this candle, this doji indecision candle right next to it, popped back up, got slammed back down again. And then we had this, which was a bearish candle, which basically affirmed that Ethereum is no good anymore. And so this is such big resistance. There were so many sellers here. It was crazy. So now, of course, we do finally have the 2-week break in the market structure. So Well, actually, there's 6 more days to go, so we don't actually have it. But, you know, pending that it closes right here. Let's look on the weekly. Go down to the weekly change. So yeah, the weekly had the bearish market structure break. So we had the top. We had the high, then the low, the lower high, and then boom, lower low. Lower low has been put in. So we got the bearish market structure break. So now on the weekly time frame, this right here is the bearish order block on the weekly time frame. Now on the weekly time frame, this right here is the bullish order block on the weekly time frame. So we are hitting the bullish order block. However, I don't like it. I don't like it because I just don't like it. So I'm not going to play it. There is this little thing right here. So let's go down to the daily. Maybe this is something. This is something, but I think that this is what's going to end up happening because I'm so bearish right now. I'm so pessimistic. We fell below this. And look at this. Look at the day. You could see it much more clearly on the daily chart too. This right here. Look at this. I wonder if you go left. Look at this. If you go left, holy crap. I don't know if you could go left even. Yeah, sort of. Maybe even more. I'm not even going to. Well, I guess. Yeah, why not? Why not? This is such a key level. This is like this level right here. This was such good support. We broke this level. We broke this level. Ethereum's done. Ethereum is done. Holy crap. Yeah, I don't even know if we're going to get a bounce up. I really don't know if we're getting a bounce. I think this is what's going to happen. I honestly think that this is what's going to happen for Ethereum. Yeah, something along those lines, because this is so bad. This candle, these 2 candlesticks right here. I've been studying candlesticks for like the past 3 or 4 months, making my candlestick video for my course. And it's like, this is so bad, as I explained earlier. So yeah, I think it's going to do this. This is like OP. Look at OP. Freaking on the daily. Perfect. Like, okay, huge major support at the 78.6. This is what I talked about last time. Bounced off of it, once, twice, and then just sort of faded, boom, slam down. Nothing, right? So now it's like, okay, oh, wait a minute. And what do we have here? This is the 61.8% of the move up. So the golden ratio of the move up, 38.2 of the swing down, 23.6 on the entire move down. So yeah, we're down back below the 38.2 of this swing low. We're back down below the 23.6 of this entire move. Here's the 23.6. And hold on a second. Where is it? Sorry, here's the 23.6. We're down below the fibs. We're down below here. That's it. I'm targeting ETH 2018 high, 1424. And then the last point that I want to make in this market update video is something that I remembered from the last cycle, which is that crypto kept on going down like continuously when stocks kept on rallying, and they went up so much. And it's like, you could have gone to Tesla and made so much money if you got into Tesla back in the bear market of crypto in 2018, 2019, right? And it's like, look at what stocks are doing. Stocks are absolutely crushing it. Look at stocks. Up. Look at Bitcoin. Down. Manipulative spike. Up. Down. Look at the NASDAQ. Consistently up. Up. ES, up. Bitcoin, down. Ethereum, down. So, I don't know about you, but it seems a lot easier to just go into stocks right now. It seems a lot easier to just go into stocks, wait until there's some huge blow up in crypto. Like, how there was the FTX right here. Okay, cool. FTX happened. So there was a huge blow up in crypto right here with FTX, and it crashed like tremendously, right? Not really tremendously, 27%. Not as much as what I thought. But I think we're going to get another huge crash. I really do think that we're going to get another huge crash. I am fairly certain of it. Mostly because of this psychology of a market cycle chart right here. And it looks so clear, like we're right here. It looks like we're right here. How does it not look? It looks exactly right there, like we're there. So yeah, I am not confident. And this is a huge head and shoulders pattern. Okay, retest, fall down. And this is not, you know, even close to this entire path. Like, this is where it should go. This is where it should go to, you know, even if we take the most conservative approach. All right. Left shoulder. I mean, shit, even the conservative approach is still basically below where I would think it would be. Down here, it perfectly fits right here, you know? So, yeah, sorry for being such a Debbie Downer in this. I'm going to look for things to short. Look, if the SEC comes after the SEC is going after Binance, okay? The SEC is going after Binance. Binance is the #1 crypto exchange in the world. Binance has trouble. Binance has freaking trouble. You bet your ass crypto's in trouble. All right? I don't know about you, but I can't afford to lose any more money. Like, being real with you, I owe a lot of money, and so I need to preserve my capital. And it's not like I need to preserve my capital. It's like, dude, I'm a trader. Like, I read trade. I have 100 books. I did the courses. I've been doing this for years. You preserve your capital. That's what you do. You preserve your capital, you know, in times like these, you preserve your capital. Then you go hard as fuck when there's a bull market. Maybe it's every 5 years. Maybe it's once in 10 years. But if you're in the market at the right time and you go hard as fuck during the bull market and you know what you're doing, that you make life-changing money. Let's say it takes 10 years. Let's say you start out. Let's say you have $100,000. All right, you have $100,000. And it takes 10 years. You're constantly in the market and you're not really making anything for 10 years with $100,000. Let's say it's 100,000 year one, it's 75,000 year two, it's 85,000 year three, it's 105,000 year four, it's 100,000 year five, whatever. The bull market comes and you fucking go hard. You turn that $100,000, you could turn that $100,000 to $1 million. Okay. Literally turn to $1 million. Okay. Well, that's a lot of money, you know? So, and if you play it right, you could make more, way more. So to me, it's worth it to be in here. But if you lose it, it's not going to be worth it. So I say play when times are super easy and get out when it's really freaking hard. Like the fact that I like I mentioned earlier, you know, and I can't even get out of some of the coins that I'm in. I can't market sell because I would have insane slippage, even though it's a huge coin on a top 4 on Coinbase. So the fact that that's actually happening is so bad. Sorry for being like this. I'm just trying to be real here because everyone seems like a lot of people seem to be really fucking still cheery. Which is great. Like, be optimistic, be cheery. But what I'm saying is like a lot of people think, oh, the number's gonna go up. It's still this is it. Like we're just gonna go up from here, dude. Like, no, the U.S. is screwing everyone over. Like, the government is not finished. It's gonna take years. So what I would do is I would play level to level with a smaller amount of capital, and I would look for areas to long and short based off of a good trading strategy, and I would do that. And then I would wait for some type of like big crash. Maybe all cryptocurrencies except for Bitcoin and Ethereum are labeled securities. Huge market-wide crash. Everything crashes 50%. That's the time to scoop up as much as you possibly can. Because it could still do it. It could easily still do it. It could easily all of these alts could go down another 50%. Simple. And Bitcoin's going to be outperforming everything continuously. Look at this. Look at Binance coin against Bitcoin. Binance coin against Bitcoin. Binance screws up against Bitcoin. What is this shaping up to be? What do you think this is shaping up to be? Left shoulder, head, right shoulder. What is happening? Okay, Binance goes, this shit happens with Binance. Too much uncertainty for my liking. Doge, look at Doge, you know? Doge against Bitcoin. Doge against Bitcoin, right there. It broke down here. So unless this is a fake out, which I don't think so because of this candle right here, expect to get to this bullish order block. You know, let's look at Litecoin. This was the bull market. This was the bear market. All the way up, almost all the way back down. COVID happened then. Up, double bottom. I think alts are gonna make double bottoms. That's my prediction. Except for Sol. Sol's gonna make the bottom. Let's look at OP. I think some of these new ones maybe have a chance. OP, I guess. I thought Aptos. I think most of them are gonna make double bottoms though. I'm on the monthly chart. I need to go to the weekly chart. Obviously, there's quant. Sorry, it's bad. This right here. This right here. Quant hits 65. I'm in. Fucking tripling my quant position at 65 right here. Because this is the level. Momentum just cannot keep up. XRP. I think XRP is the one to look at. If I'm going to look at anything, I'm looking at XRP and seeing how I could short it. Liquidity sweep, boom, retest, fall down, back up to resistance, break in the market structure, up to the bearish order block, move down. You could easily do this. This is an easy play. This is the play out. This is what I'm going to put on for XRP. This, with my pessimistic view, is what I'm going to do. I'm only going to risk 1% of my account because, actually no, I'll risk 2. But yeah, the XRP, XRP is at the resistance, bearish order block. It looks good to me. This looks like a thing, like a good play. Matic is going to come up to a good level eventually. If Matic gets back to this level, I was stacked. Well, I don't think I actually stacked Matic up here, but if it comes back to this level, huge resistance, probably start stacking in shorts up here. I don't know if it's going to come all the way up there again, but this would be a pretty solid play for Matic, something like that. I'm going to do all of these. I'm going to do a lot more coins on my checking the charts video because this video is so freaking long right now. But yeah, I'm going to try to just get out of all my stuff and try to buy back lower. I'm not going to market sell though. I'm not market selling. Okay. Please do not think that I'm market selling. I'm selling on the way up in increments. Like, I bought a bunch of OP down here. Like, I'm selling in increments on the way up. And I'm not just panic selling, but I definitely am selling on the way up. And even Link, like I bought some Link, selling. And I have stacked orders up here too to sell. Because unless Link comes back up and makes this a swing failure pattern and closes up here, then this is bad. This is like really, really, really bad. And then this is going to be the new demand zone. So then I will wait for 15% lower and I'll try to get in down there. Yeah. Wow, this got really like depressing. Sorry, I'm not in the best mood right now, but I mean, I'm just looking at it like I mentioned in the beginning. I'm looking at level to level. I'm level to level. Look at the total market cap. Hit the resistance. Had a bearish swing failure pattern at the resistance. Had the bearish market structure break right here on the weekly time frame. Came up, retested the bearish order block. Had another bearish market structure break right here. We are in a definite downtrend in crypto right now. No doubt about it. We're in a downtrend in crypto on the weekly time frame. That's not good, So if we were in an uptrend in crypto, then maybe, that would be fine. But we are definitely in a downtrend on the total market cap of all of crypto on the weekly time frame. The only thing that we are not in a downtrend in is the monthly time frame. So if this is going to do something positive, I would assume that it will come to the 61.8, and that's where the total market cap will come to, right under $1 trillion, 950 billion, and then we'll move up. But yeah, I'm not looking to buy anything anymore. Things are not looking good. So with saying that, protect your capital. Don't try to overtrade. Don't lose everything. Take this time to familiarize yourself with big concepts, learn about the technology, learn about how to actually trade, learn about investment strategies, figure out a really good game plan, different strategies for your different portfolios, what you plan on doing, and stick to that. That's what I recommend. Or play level to level, and I'm going to update more in the checking the chart videos, and that in those videos I really do, that's where I do level to level, like 100% level to level on the lower time frames, just to try to get in and get out. And yeah, so I will do that. I'll make a checking the charts video real soon. And until then, I'll see you in the next video.